Hi, it's Kristin Jamieson with Success Mortgage Partners. Today we're going to be talking about why it's never a good idea to let anybody pull your credit during the mortgage loan process without consulting your loan officer first. When you apply for credit, whether it be for a credit card or a store credit card or a mortgage or a car loan, it's considered a hard inquiry. And all hard inquiries actually result in a reduction in your credit score. And depending on the type of inquiry, mortgages and cars are going to reduce your credit score by less points than, say, a store card. So going to save 30% at Kohl's on your $100 purchase, you may actually see a 30-point reduction right away from something like that. And it's just a hard inquiry, and credit scoring models are all different. So Experian, Equifax, and TransUnion, you're going to pull, we're going to get a different score on the other side from each of the three major credit bureaus. When somebody's credit seeking or applying for new credit, the hard inquiry does actually result in a reduction in your credit score. So utilities are a little bit different than a credit card or a car loan or a hard inquiry. Those are actually considered soft pulls. And they are going to pull your payment history, and they may pull a credit score on their site, but it's not an actual hard inquiry. So we won't see a reduction or see anything on our side from the utility companies. And obviously you need to have your water and electric turned on for moving day. So getting your utilities turned on and having them pull your credit will not affect your mortgage loan application. Well, really, it's going to be, your utilities, your cable, your phone, your internet, the things that you need to have in place when you move into your new home. You never want to, in the loan process, have anybody doing hard inquiries unless it's absolutely necessary. Sometimes they can't be avoided, and we understand, but that's why you need to have that one-on-one communication and relationship with your loan officer to talk through those things. Somebody that has an 800 credit score and gets a credit inquiry is going to have a different outcome than, say, somebody that maybe has a 600 credit score and barely qualifies for that loan program based on their credit score requirements. If we had to, if it dropped their credit score below a 600, we may not be able to do their loan anymore. And that wouldn't be good to not be able to close on your new home. So it's, again, just really having that one-on-one relationship with your loan officer and asking the questions and just making sure you're talking through the situations before you just go in and do things that could affect you closing on your new home. Some of the loan programs do require a soft pull or a second credit check prior to closing. It's not a hard inquiry, so you won't see a reduction in your credit score from lenders doing this. But what it will show is the changes in balances or any new credit or any new credit inquiries that have happened from the initial credit pull that we made, either in pre-approval or at application. So you always want to err on the side of caution, and if you're planning on buying a house or going through the home buying process, that you really just protect your credit and protect your social security number, because little things can, unfortunately, that something that you think might be little, a $25 monthly payment or a reduction of 7 points in your credit score could mean you no longer qualify for your new home, that you've now paid for appraisals and inspections and your earnest money deposit. We've seen people end up out thousands of dollars because they wanted to save 30% at Kohl's. And to me, it's just never worth it. So always, reach out and make sure you have those open lines of communications with whoever's doing your loan. If you ever have any questions on credit or the mortgage loan process, please don't hesitate to reach out to myself or my team, 352-242-1535.